Now, this is an incredibly simple indicator. It looks a little bit complicated, but all it is doing is looking at the 28-day percentage change in the underlying price of Bitcoin, this orange line here, and then the 28-day active addresses on the network, the percentage change in that, to actually kind of check the network utilization and almost a fundamental valuation to back up price increases or decreases in the Bitcoin price action. And then what we can do is, if we remove that, we have this upper red boundary and this lower green boundary, which are just standard deviation lines of this 28-day percentage change in active addresses. So for the strategy we'll be covering today, this is the basis that we'll be using. And as we can see, as we just overlay this, what we're really looking for is crosses above and beneath these standard deviation bands. So for example, as Bitcoin was first rallying up here into six-figure territory last year, we could see we ran above this upper red standard deviation band, potentially indicating that Bitcoin's price had rallied maybe too fast and too high, considering how many people were actually utilizing the Bitcoin blockchain. So when we dip beneath these upper red deviation bands, we're actually taking these as sell signals. You don't want to sell immediately because Bitcoin can have sustained strength. If you just look here, we could see Bitcoin first cross this upper red deviation band around the low $90,000 region and actually continued running until we dipped beneath finally above $106,000. So you really need to take into consideration that just because Bitcoin is currently oversold doesn't mean it can't get a hell of a lot more oversold. And the same is true for the downside. If we look to when Bitcoin crosses back above these lower deviation bands, these are going to be entry signals for this very simple strategy.